traders. So hello again, a little suspicious minds there, and we're kicking off a pre-game show, the pre-show of the show. Oh, just like Elvis, he's not going to go away too easy. I think I just killed him though. All right, sorry about that. Anyway, we're just on the mic here for a few minutes and moments here. It's about 6 o'clock, just doing a pre-game, red carpet show here today. And we're setting up, I actually just sent myself some stuff. I want to show it to you on the screen here. But until then, I'm going to do a video. This will be sent out to the members later tonight, or at least by tomorrow morning. But this is the last couple of days. We're going to run down the ES here and kind of explain each of the setups here and why we kind of mark these levels off. And that's important because remember, we go through this day, when we're going through the day, we're marking these levels off real time. When we get a level, I'm marking it down. We get a level, marking it down, explaining what's happening as it's happening. And some of the times, it's important to remember what's happening. Some of these are just tradeometer setups, which are a little bit harder to understand, versus seeing a visual divergence. The divergence kick butt, man. So we're going to just be kind of breaking some of these down and just showing you what you should look for in a typical day, a typical ES chart. If you look back at every chart, I could go back from, this is Wednesday, I'll go out to Tuesday, and I'll say, all right, what are we looking for? We could look back into this chart.
Yes, tradeometer overbought.
You could have a tradeometer going overbought right there. We had a divergence right here instead of a wedge pattern. The move up here, what was here? A tradeometer set up, and it was a flag. It was a triple stochastic flag set up, so we recognized that even though we had that sell signal, we actually had a little pullback area also because of that sell signal actually was part of a bigger upside move. It doesn't mean that, again, it's all relative with the time frame, but these little areas that we could identify is very important. This is the day before. Look at this. And in some cases, you will get an overbought level or a signal, and then you chop around and continue to push higher. And there's things that will move the market outside the realm of normal action. It'll be news. It'll be buy programs, sell programs. It could be some algorithms trigger. And this looks like a nice. And it looked like news, but I think it was a buy program that hit. But overall, things started to chop around. Once you start to get back into a rhythm, that's when we take advantage of the signals we get. So half of the job is already done. More than half of the job is done for you. The small part, which is really one of the more important parts, are understanding market conditions and if the setups are valid, or is this market here telling you something? Is it a trending market where you'll start to see these setups that come up more on the sell side, but continue to push higher, even though they are giving you great setups. Now, this is another thing I want to talk.
Yes, tradeometer overbought.
And you can hear it right now, live, right now. Market's opened up, and we just got a tradeometer setup because that goes overnight. And it's not the same though. Overnight it doesn't calculate the same. Remember, my tradeometer, indicator takes data from both the live cash chart and the futures chart. That's what makes it really, really, dead on. So the overnight trade doesn't have all the formulas, all the components here added in. It still gives you great setups, but we just keep it running for back testing purposes. But the real deal starts at 9:30 with the tradeometer and goes to 4 o'clock. So, and again, if you could identify the direction of the market, if the market is breaking out or breaking down out of an area and it's causing it to, increase in volume and momentum, then you have to recognize that and understand what team you want to play for. What side you want to be on. The grinding up team, yes, probably, or the team that continues to get pushed up against the rope, pulls back a little but then pushes higher, pulls back a little then pushes higher. You have to be very, obvious of this to take profits off of this, and you can't. And in some cases it won't work with a set stop or a set profit target. Lots of times you're going to have to read the signs that are showing you. Sometimes you get a fast rotation. Sometimes you don't get that rotation. You should read it and get the hell out of Dodge. I think everything is pointed and played out and measured out. There's a whole manual behind the method, and that's what you get. Over time, all these videos are a part of a huge manual, and understanding why strength is being showed. You have an embedded stochastic. Why, these setups are going to be shorter lived versus a big move like this, or a bigger move down. Combination setups and stuff. There's just always so much going on there. So that's what I want to work on right now. A video which I kind of did right now, but that's what I'm going to work on right now. So yeah, I'm going to decide to record the process here too. And again, this is a something I'm setting up for a video, but I'm going to do a video on the back scenes of the video, and we're talking about the intraday chart. That chart that we follow each day, and this is basically on the this is actually basically on the ES chart. That's the one main chart we watch every day, and then we jump from stocks and everything else that we're looking for. It really works for everything. So that's the thing that you must understand. This, you could look at this during the YM or the Dow, the Nasdaq, the Russell. You could look at that as oil. You can look at individual stocks, the Qs, the ETFs. The technique works across the board to everything. And it's just about finding the right vehicle to trade. And when we talk about the right vehicle, what do we trade to get the biggest return in the shortest amount of time off the signals we get? We talk about finding a 1 minute setup on the SPY, and you might get 10 cents, which looks like a nice rotation, but you might get 2 points, or it's a different balance. Are you willing to put up the money to get 10 cents on a trade versus maybe trading options on the ETF, the SPY, and you might get a 20% return versus a 0.2% return, 0.02%. All right, so I'm just thinking here what my third was, and I guess one that we concentrate a lot is the triple stochastic. Triple stochastic flag setup, and I'll show you that on the chart too. That's the top. That's definitely the top three. Now we get down to the nitty gritty. If we're searching for setups, especially if you're getting bored and stuff. I mean, there's the lane divergence is a great one. I want to even put in the double top divergence. I consider that the same. I do consider that the same, but I might even, throw it in there. I'll just put it up here also. It's a really good setup too. That almost might be number one for me. But we're really working on number 4 now. And once you get down to this level here, like I prefer taking just the best of the best setups. But just to, finish out the list here, we have the triple stochastic flag up. We're going to have to just go to an HPS setup playbook play. We have plenty of those. We have coil stochastic setups. But we're really talking about setups during the day, trading day. It's not a daily chart that we're looking at. So what kind of setups do we look at during the day? No doubt the divergence. No doubt the tradeometer alert. No doubt the triple stochastic flag setup. There's not much else that I look for. We might have to just keep this at the top 3. And we have to give it a little, what do you call it? Environment around, something that's underneath it, to kind of give a perspective. But again, there's not many other setups that I go for. We have the triple, we have stochastic, we have channel line and channel lines. All right, we could go with that. We'll go with number 4 is going to be oversold stochastic. Channel line bounce. And channel line bounce. And then number 5. It's going to be a hard one to pull out of this rabbit hat here. Any suggestions in the room? What I just have done, I've actually gone to the dashboard. If you have the dashboard, And on the top of the dashboard, you look for the playbook, or at least look at the forum. And then under the forum, we have our trader forum. You can see nice threads here, people communicating back and forth. You have a DayTraderRockStar playbook there. And this is where we have all our educational videos. Lane divergences, how to walk through the trading day. This is kind of similar to that. Triple threat setup, which falls into the triple stochastic flag setup. X marks the spot. 200 EMA breakdown, channel line bounce was great on the daily. The 1, 2, 3 pattern, just a standard pattern. That's probably it. Wedge pattern, that's a good one. Cause stochastic channel breakout, stochastic rotation, another great, and the lower trend line stochastic bounce, which is the one that we just put on the screen there. So this is oversold stochastic channel line bounce, or lower channel line bounce, oversold stochastic, same thing. I'm going to go with this one as a wedge pattern. A wedge pattern. See, lots of times you get that wedge pattern, you also get that divergence in the wedge pattern. So, what's they tend to come together. We'll keep it a wedge pattern for now. All right, I'm just going to keep it at wedge pattern for now. Now, knowing that these are the setups that we're looking for, we're going to go back and take a look at the chart and just kind of remember these are the ones we tend to look for. This is the one we want to trade. And also, underneath everything, we're taking into consideration of the overall market conditions. As I type real fast, did I spell everything right? Looks pretty good. Consideration of the overall market conditions. Consideration of the conditions. If the market's trending high, we have a breakout, we have news, whatever. These could play out. So, all right. So let's go now and take a little look at a typical trading day. And what I noticed a couple days ago, which I wanted to go do this video for, is, and again, this is going to start on Tuesday. We could go out to Monday also. But just pretend you're overnight and you're watching the market here. This is what we want to talk about. We're watching the market. You're up at 6 o'clock in the morning. You can't sleep. Got kicked out of bed. And you're going downstairs. And you see the market's playing out here nice. What we're looking at, well, I don't have the tradometer in front of me, so I can't look back at that because I wasn't paying attention to it at that time. I do have the other tradometer marks during the open session when I'm in front of the computer, but I didn't mark them down here. There might have been a sell signal here. There might have been a buy signal here, but I can't go back and tell you that happened. But we can look back and say, all right, as this plays out, and we're not seeing any real big setups here. We see a rotation, triple stochastic kind of a setup here where we have all three stochastics rotating up, and that's a setup in itself. It's called a triple stochastic setup, and it's just we have all three stochastics rotate back up to overbought or rotate down to oversold. And we tend to move with those. But we're not going to, probably would not trade on that. Well, now the markets continue to move now. Now we're getting close to the open here. And you can see the market's here flat, and the market opens up. Now we have a lot of volume coming into the market right at 9:30, and things start to take off and drop. And there's a lot of chop that happens in the first half an hour. We tend to be cautious on the first half an hour, and not all of us. But, I put out the air of cautiousness because sometimes you'll see a pop real high and then a fast drop, and it just gets a little wacky. But it does start to give you good setups. So whatever this setup was back here, 22.95 was the high of the session at that point. And you could see we kind of chopped around. Now what we're doing is watching the markets here, and we're just waiting for one of those top 5 setups to happen. We need, and I didn't add in a 1, 2, 3 pattern, which is really a fundamental pattern identification kind of technique, where we start to measure out a pivot area here and a pivot area here and maybe a pivot area down here. But again, we try to we know that the first half an hour is more volatile. We tend to break through those levels. But even if I go back here for a second, and if I would have followed up on what I was talking about here by taking a look at this, let's see how well that worked out. Here's your pivot area and another pivot area right there. And again, I typically don't do this. So you might start to look at the market and say, all right, we're pretty choppy here. Let's see how this holds up. If that held up on the bottom, then I would consider, yeah, and it kind of did. You could even tighten this channel up here a little. So now that you had this, 1, 2, 3 pattern, you came down, you started moving back up, you would consider this a pretty decent channel. You pay attention to that top trend line, you pay attention to that bottom trend line, and you make sure you find the combination of stochastics are lining up. But let's just watch, and you can see we kind of moved up to that level. Even though we weren't having any significant signals on tradeometer or anything, you did have a trend line, and it's always good to have something in your sail. It's either you're looking at, a recognizable pattern or one of the 5 good setups here. And all these work out. And then we actually had a pop. And there's a this is actually after 950. You can see how fast we're moving along in this day. Let me see what time frame we actually have on this. Almost. Oh my God. No, it's 1 minute. Oh, yeah, it's 1 minute. All right, and the day starts up here. Now we continue to move up here, and what do we see here? So the market here kind of pops out of this. And what we see is a pop here, our first little pivot area, and we pull back, and we pop back up, and we put another candle in here. But that, so we kind of tested an area, giving us kind of a double top. But at first little peak right there, we had a nice little peak. And now a stochastic divergence has to pull back underneath that 80. Then the market needs to push back up to the same level, but the stochastics have to fail to get back to that same level. And when you have that, that's the divergence. That was our first setup. And a double top divergence would be our first trading opportunity on there. Placing a stop above the double top. All right, and this is the first time we're actually seeing that signal. All right, it's not a very easy signal to read if you know it. And look at that. Now we had and this was also a tradeometer setup. So a combination of a tradeometer setup, it's the blue squares, yellow squares are the round bots. Plus the divergence is just a kind of a go-to trade, and this really did flush perfectly, and this seems like it would have given us a bigger bounce area here, but we didn't get a tradeometer until right down here, and that makes you really respect this kind of thing, because you look at that, look at the bounce we get off of that level. I mean, normally you would see maybe an oversold level here. Or here, or here, or here, or here, or here. It came right down here, right down to that 89 level. There was nothing there before it. Yet we got that tradeometer set up, and from that point on, we started to bounce. And again, I'm just going tick by tick, and we're following this day along. And I said, well, that would have been, a tradable opportunity. It falls into that, and then look at that market. Now, I didn't put this trend line in down until after. So now that we have a pivot area here, I put this trend line. Now we have a beginning of what we call a 1, 2, 3 pattern, and we can then, of course, you can see it coming back down, and then all of a sudden we get hit with another tradeometer setup right here. Now it does get a little choppy there, for a second, but you know what? It almost came very close to that trend line. It spiked down and put a big reversal candle in here. You kind of had an argument for a 9-3 divergence here, if you want to argue that, but I find those to be too risky, But we did get a little bounce on that, and a bounce that, at the time when we moved up here, we were flatlined. Now, if we started rotating back up here and we started the momentum in the longer time frame, that's pretty good. But considering we stayed flatline here and we made a fast rotation, this is what we call a triple stochastic flag setup. It's a sloppy one. It's not normally we like to see this embedded under 20. It was definitely down around that 20. This was hanging there, and this rotated back up, and that's our flag setup. So that's another trading opportunity. And again, now we have an established channel line. So you have another breakdown, a triple stochastic channel line bounce, recognizable pattern. Combination, and we actually got a nice little bounce off of that too. So the only thing we look for are the things that count in the market. Now we actually had a nice rip from this point up. We didn't see anything. I'm actually starting to read a double top divergence, possibly right about here on the 14-3. We also had a tradeometer setup and a Rambot setup. Now I remember this. I think the market got a little stronger. Let's see what happens here. We pulled back. I think that pullback was a decent enough pullback where we had those signals at 88, pull back to 87. Truth is, I want to get at least a point. I want to, kind of say, in worst case scenarios of taking your entries and exits, you want to at least get a point to bother with it, for me. Because so many people are placing they don't have the discipline to take it off with the rotations. Lots of times you're putting in a bracket order that has a point, you're letting it play out. And the market doesn't work that way. The market has momentum, and if you can see that momentum shift by some of your oscillators here, you better pay attention to it. So it actually pulled back, and pulled back good. It was pretty much a channel breakout, stochastic, reversal on a small time frame or a trend line reversal. And from that point on, you can see we now had another overbought level. And no divergence, just a tradeometer, and that tradeometer here, really nice. Really nice pullback. And here's another tradeometer signal. We did have a Rambot signal here. Didn't play out, but the tradeometer, like I said, is the, when we look at our go-to trades and what you're looking for to take these trades. The tradeometer is very close to number one. I mean, the lane divergence is great. The tradeometer here, right up there, 1 and 2. These are the ones I concentrate on. When we talk about high probability setups, this is what I pay attention to. No. Futures are down $1.50 right now. So the day comes to an end and the day is over. So you had some opportunities here. If you look back, take a look at the bird's eye view. Very organized market, recognizable channels, one triple stochastic flag setup, great tradeometer setups. Everything here working really good. And then, of course, the end of the day came and the day ended. And the futures continue overnight. They continue to make its move. We don't put any marks there because we're not normally there. We're probably, living a life somewhere along the way. But this will continue on all the way until tomorrow, and the next setup will come. Let's go out to the day before here fast. If we could find it one day. Ooh, yeah. All right, I want to fast forward it on Monday. This is a good way of going back if you're not, and here you are, 7 o'clock trade going into the 9:30 trade. The big pop on the 9:30 trade. Oh, did we just do this one? This is Tuesday. I should go out to Monday. I apologize. I didn't go out far enough. There we go. So hard sometimes to gauge where these times are. Here we are. All right, here's Monday. I was going to say, that looks very interesting. But this is also an interesting setup here. All right, so here you have your overnight trade. It's drifting down. Actually have a little bounce here at 8:30. There was probably a trend line that we started to map out here later in the day. That's what that is for. But we're not really involved in the market at that point. We're doing our news. If there was a divergence there, I would definitely tell people about it. But there wasn't really a clear divergence there. So we had a nice reversal, and we started pushing back up. We came to 9:30. The volume comes into the market, and the day has started. We start managing the, start outlining the day. The one thing we start to see is the slower stochastic is embedded here. The medium stochastic is pretty embedded too. That's usually a sign of strength, so we get a push higher. A little pop, a little pullback here. No real signals. Our first signal comes in as a tradeometer around 10:30. Tradeometer setup here. And what a nice pullback from there. So beautiful setup on the tradeometer. Now we've broken down to a trend line. It was an established trend line. It was a good pivot at 8:30, another pivot at 9:30. We came up to it, chopped around. Still would pay attention to this this trend line. I think it comes back in play. And then when we start to maybe measure out a little wedge pattern. Wedge patterns are typically pretty good patterns to break out of. The timing is good on that, and we usually see divergence into it. In this case, we had a Rambot in the wedge, and of course, a Rambot's going to give you one of the bigger moves in the market. And remember, hey, I'm just writing. I'm just circling them when they come. When the Rambot comes out, there's nothing to hide. I'm putting it in there. You're seeing the moves, so that's why it's ranked high. And then, of course, we're watching the market here make its moves. And then we have another Rambot signal here, and it does break down through. I'd say this one definitely failed us. Got a little bounce to the 50, but definitely failed. And we start to feel that trend is starting to change here. And markets, trading is not about winning every single one of your trades. You're going to have losses and stuff. The majority of the time, again, if you stick to the rules, you're going to have winners. There are going to be times when the market turns on it, but you have to realize, when you start to see that, it has to register. You have to register. Something broke down here. We're supposed to get why did it break down? Why did this divergence start to look like it was a divergence and it broke down? Maybe there's something going on there. And you can see the trends here starting to pick up to the downside a little. But then again, another tradeometer comes in. This one seems to have nailed the bottom pretty good. So that the tradeometers, love it. No real divergences here. Nothing to really show you a divergence. There was a little negative divergence here, but into the last hour, we would be very careful for a final push. Again, you have a tradeometer signal here. And not a bad pullback. It pulls under the 200 period moving average. You're not going to get to 87 and according. Probably not going to even get to 87. You'd be lucky maybe you get 86.75. It came down to 85.75. You didn't get that, so you're talking just a couple ticks. A tick here, a tick here, a tick there. I like to use the not the analogy, but just the comparison of just being able to walk down the street, get a good signal, and find a $10 bill on the street. Now, not very often you get a $10 bill. Setup. I mean, hopefully you get a much bigger move and you can pull a point or a couple points out of each one of these trades. But if you're only getting a tick and the rotation's fast and you get oversold and you're only getting a tick, you have to respect that oversold level. Understand that is the criteria and that's the methodology that tells you, you're gonna have you're gonna have an opportunity here. If you get a bad fill, all right, you still might get a tick. Remember what you're dealing with the ES or whatever contract you're trading. You can make money on this. $12.5. I always call it $10 bill, a tick. So even if you took it off, you had 2 ticks, you had $25. A point is $50. Consider it like finding some money on the ground. I'd pick up $10 bills. I'd pick up $1. How you tell yourself, would you pick up $1? Hell yeah, you pick up any kind of paper money. But what makes this different from a setup that really collapses and stuff? Well, it doesn't. That's the angle. That's why the market and the casinos will always get you. Because you could probably get a good chance of beating the casino if you play the right games and stick to a real strict methodology and count some cards. But they're going to kick you out eventually because they know most people can't do that. Most people need to sit back down, try to make their money. They're going to push their trades. They're going to fall outside their patterns. They're going to sit at a table where everyone's saying you need to hold if the dealer gets a 5 and you have and you decide to hit. A lot of people just don't understand the game, and the game is this will give you a high probability setup, but maybe it's not going to give you what you want, and that's dangerous. But that's also a dangerous time frame. We understand that. I think you're going to make most of your money between 3 o'clock and 10 o'clock. Well, you know what? I shouldn't say that. You're going to make a lot of money in the first hour if you're on the right side of the market, but the signals are going to come in really nice between that. As the market calms down, you're going to get real clean signals, and then as you get closer to the close, you get further moves, pushes, drives, it, and then that's the end of the day. But overall, that's what we're looking for. We even had a wedge pattern on there. So we actually had a couple of the we had lane divergence, we had the tradeometer alerts, triple stochastic flag setups, oversold stochastic channel line bounces. I don't know if we mentioned that in the wedge pattern. We had that in consideration of overall market conditions. Once you stick that in your pipe and smoke it, then you're working on becoming successful. Anything less is, you're just another guy trying to get at the poker table. So we'll end this first video. I was doing a little video just talking about some of the setups. So I want to end that first video. Send this out on its way. We're going to be doing a show coming up in about a half an hour. Wow, I need to do something. What do I need to do? It's a half an hour to go. So let's send this on its way. Don't forget you could watch the show every single day, daytraderradio.com. If you're watching this video and you're interested in the Tradeometer, go to tradeometer.com. If you're a member, you get a definite discount on that, but you don't have to be a member to have the Tradeometer. But you're never going to be the best you can be without the Tradeometer. It's going to help you a lot. And with that said, let me send this video on its way, and we'll get started on the show. Have a great day.